Picture this cinematic scenario for a second. जब businesses struggle कर रहे हैं, factories shut down, and workers are just facing incredibly tough times. Suddenly, an unseen support system activates. It's like the clouds part, a golden light shines down, and the government steps right in with a massive lifeline. Government grants.
But here is the real question you've got to ask yourself. पर क्या ये free पैसा है या hidden responsibility? Look, when the government just hands over a check or land or machinery, it is so tempting to just treat it like an instant jackpot. But as ICAI's Accounting Standard 12 shows us, it's actually not a free-for-all. It's a highly structured system bound by some very strict accounting rules.
Chapter 1. The Invisible Support System.
Let's meet Arjun. He's a young entrepreneur who's literally on the brink of failure, right up until this magical letter arrives reading, "Subsidy approved." This marks the start of his AS-12 journey. Now, AS-12 clearly defines this assistance, whether it's in cash or kind. But the crucial catch, AS-12 geta hai, har paisa income nahi hota. Before you even think about celebrating, you have to ensure past or future compliance with whatever conditions the government attached to it.
Chapter 2. The Rules of Activation.
So Arjun is sitting there wondering when this blessing officially becomes reality in his books. Well, you must meet two totally non-negotiable conditions set by ICAI. Step 1, you need reasonable assurance that your enterprise will actually comply with the conditions. And step 2, you need reasonable assurance that the grant will actually be received. Just holding an approval letter isn't enough. This leads right to our golden shortcut rule for exams and real life. Pehle pakka, fir entry. If you aren't absolutely sure you can meet the terms or get the funds, you simply cannot recognize the grant.
Chapter 3. The 3 Forms of Power.
Let's see how this actually plays out by looking at the 3 types of grants Arjun might get. Type 1 is a grant specifically for fixed assets. The government says, "Ye paisa lo, machine lagao." AS-12 gives you 2 perfectly acceptable methods here. Method 1 is the capital approach, where you literally just deduct the grant amount from the gross value of the asset. Super simple. Method 2 is the income approach, where you treat the grant as deferred income on your balance sheet and systematically transfer it over to the P&L over the machine's life. ICAI allows both, but they demand absolute consistency. You can't just flip-flop between them. Then we have Type 2, which focuses on income-related grants. This is when the government says, hey, this money is for your daily expenses, like a salary subsidy or covering electricity. Here we have to strictly follow the matching principle. So if your salary expense is 1 lakh and the government grant is 40,000, your net expense impact is exactly 60,000. Jis expense ke liye grant mila hai, usi period mein recognize karo. It's all about perfectly matching the government support to the exact cost it covers.
Now Type 3 covers non-monetary grants. Agar asset free mein milta hai, say the government just hands Arjun a free piece of land to build his factory on. AS-12 states it must be recorded at a nominal value. We're talking like 1 single rupee. Why? Well, it officially acknowledges that the asset exists and is owned by the company without artificially inflating your costs. Now, sometimes fair value is used if it's specifically required, but nominal value is the absolute standard for free assets.
Chapter 4. The Plot Twist. Refunds.
Suddenly, a massive plot twist hits. Arjun completely fails to meet a primary condition, and the government demands their grant back. The fundamental terrifying rule here is Gullet benefit liya to reverse Kurna Partaga. If it's an income grant refund, that hits your profit and loss statement immediately as an expense. Boom, done. If it's an asset grant refund, you have to reverse whatever accounting method you originally chose back in Type 1, so you either increase the asset's value back up or you reduce that deferred income balance.
Chapter 5. The Master Scroll of Presentation. So how do we actually show this high-stakes magic in the financial statements? ICAI focuses heavily on transparent presentation and proper disclosure. Whether you're showing a revenue grant under other income, deducting it directly from your expenses, or listing an asset grant as a deferred income liability, the paper trail has to be crystal clear to anyone reading those financials.
Chapter 6. The True Philosophy.
Fast forward a few years, and Arjun's factory is totally thriving. His employees are happy, and he succeeded because he understood the real logic of AS-12. The core philosophy here is simple yet profound. Smart accountant वो नहीं जो profit बढ़ाए, बल्कि वो है जो सच दिखाए. The ultimate goal is to only show income when it's genuinely earned, match your expenses perfectly, and completely avoid overstating profits. Government grants are a serious accounting responsibility, guys, not some magical shortcut to inflate wealth.
Okay, let's lock this all in with a super fast exam gold revision of our 6 key takeaways before we wrap this explainer up. Number 1, recognition absolutely requires reasonable assurance. 2, asset grants give you 2 methods. 3, income grants strictly follow the matching principle. 4, free non-monetary grants use nominal value. 5, refunds require reverse treatment. And 6, presentation needs to be flexible, but always consistent.
And that is the complete story of AS-12. Agar AS-12 of 100% clear ho gaya, please hit that like button, share this explainer with your friends, and drop a comment below with next AS to let me know which accounting standard anime we should break down next. Until then, ask yourself, is your business built on genuine value, or are you just heavily reliant on the invisible support of a grant? Keep structuring that knowledge, and I'll see you all next time.